Hello, this is Chelsea Franklin, head of the Franklin team, Remax Alliance. I am with Fargo's Cody McHugh, and
Hello.
we're going to go over just some stuff that Wells Fargo can offer. They've got some really cool products. But Cody,
Yeah,
how are you?
I am great. I'm great. Thank you. Yeah, it's obviously it's been hot here in Colorado, but I'm
Oh,
doing good. Thank you so much for having me.
yeah, thanks for jumping on. I know we went to lunch this past week and he was going over some new stuff that is specific to Wells Fargo, which I was like, oh my gosh, I haven't heard of this. This is amazing. Can you jump on a live with me? So
Yeah.
this is great.
Yeah. So yeah, basically a couple of things before I get into that. So there's there can be a misconception around when working with big banks or just bank lenders in general that we may
Yeah.
only be available within the bank hours, which is not the case. So I provide my personal cell phone. I am available on nights and weekends, as especially with when you're out looking for homes with your clients. Certainly, that's going to be the time where you may need an updated pre-approval letter, or you may need me to be available to call and speak with the listing agent or whatever it might be. So, so I am available outside of what's considered, the banking business hours. So just
Yeah.
wanted to kind of talk to that real quick. But yeah, one of the products that we were talking about earlier this week was something that we have available that's exclusive with Wells Fargo, which is called our Builder's Best program. And this allows us to be competitive and a lot of times beat out the new construction and lender incentives that the in-house lenders might provide. So obviously there's a lot of new construction in our state, and what we're able to do is essentially we can lock in or protect the customer's interest rate for as far out as 2 years in some cases. Generally, that's not needed. Usually, you can do 6 months, anywhere between 6 and 12 months is the most common, but it will allow and protect the interest rate for the customer for that time frame while their home's being built, and just take that off their list of things to worry about and just worry about the construction of their home, among other things.
Yeah.
So it's really, really nice. There is an upfront fee that's essentially like your rate lock insurance, but in a lot of cases, you're able to get that credited back to you at closing.
Oh,
So
awesome.
it's just kind of a placeholder.
Yeah.
So yeah, so that's, and then what's even better is if interest rates were to improve during that time, then you can do a float down so you can take advantage of that and get the lower interest rate if rates were to improve.
Yeah. That's so awesome. Mostly because interest rates are so low right now. They're the lowest they've been in 2 years.
Yes,
So
exactly. And and
everyone's taking advantage.
and hopefully they hold, but the reality is that they likely won't. So with them being so low, the likely place for them to go is up. So if
Yeah.
there's someone getting into a project and it won't be finished till next summer, and they're worried about where interest rates might be by that time, we could get them locked in and protect it with the interest rate as it is now today,
Yeah.
which could be huge, significant savings in their monthly payment and interest over the life of the loan.
Yeah, amazing. Along with that, too, a lot of builders offer some pretty great incentives. And I think people, they walk into a builder, or when I'm representing a client, we go meet, sit down with the builder's representative. They always push, of course, their preferred lender because they've just worked with them, they've got a history with that lender.
Hmm.
Um, and that buyers don't even think to look outside of the builder's lender because of
Right.
whatever incentives are being run. But a lot of times too, you can just go ahead and match it depending on what that incentive is.
Yeah, exactly. So, one of the first thing I would look at is how is the contract structured with that in-house lender. So, in some cases, you can still get some or even all of the incentives, whether or not you stick with the in-house lender or not. So, I've seen a lot of times they'll layer it where you get one incentive if you do the in-house lender, and then another one whether you stick with them or not. So
Yeah,
part of it is just reviewing that and making sure if it is where they've really heftily upload or front loaded those incentives,
yeah,
we can look at it. Um, a lot of times, I mean, if you even take being able to lock in your interest rate now versus within 2 months of your close date, and the likelihood that interest rates will rise. So being able to take advantage of that is one way to get savings, but we can typically look at where the rates are for that day, and we can provide you a lender credit to help be competitive with what the builders are offering. Um, in addition to some other incentives that we may be able to look at depending on who your employer is or if you're a union member. There's a lot of different options that we have at Wells Fargo.
Yeah, I love it. So good. What other cool products do you think that people should know about?
Yeah, so in prepping for this, I grabbed one other quick one that is also exclusive, and this is in particular. So it's out of. I mean, it still may apply, but it's a little step away from the new construction exclusivity that we were talking about. So in this case, this is specific to um, jumbo priced homes. So in most counties here in Colorado, that is loan amounts greater than $484,350.
Okay.
So that's becoming more and more common. But what we can do with that is in the jumbo space, we can do at Wells Fargo as little as 10.01% down, so just a shade over 10%
Wow.
down, with
Nice.
with no mortgage insurance. So that's the key. Is you a lot of times you feel you have to do 20% down to avoid mortgage insurance, but that's not the
That's not
case
true.
with jumbo. Yeah, and what's even better is in some cases, depending on what the customer situation may be, um, if they had, my cat might be jumping into the screen. So just
I know. I thought I heard my kids walk in the door. I'm like,
yeah,
hurry.
she's just really curious. But depending on the customer situation, and I've done this several times for people, if they have, so they say they only had the 10% down, but they actually do have a lot of equity in their departure home. It's just the timing's not lining up where they're able to sell that departure and come into those proceeds just yet.
Yeah.
So what we can do is if they can qualify for the new home, 10% down, no mortgage insurance, then what we can do is, um, with as long as within 180 days, they apply enough principal. So say departure home sells 3 months later, and they can pay down the principal, and we'll automatically for free lower the interest rate by 0.25%,
Wow.
and recalculate their payment based off the lower principal amount.
Oh, fantastic.
So here's kind of just a quick example I'll read through of that scenario. So um, Chris and Blake are relocating, and they found that the new home that they want to buy right now, they need a jumbo loan, but don't have the 20% down payment because they haven't sold their current home yet. They get a jumbo loan with the jumbo rate reducer option that I'm talking about and put 10.01% down with no mortgage insurance. They close on that home, move into their new home, get settled, and so forth. 4 months later, they're able to sell their original home, and with some of those proceeds, they pay down a portion of the loan balance, and they're able to get their loan to value to 80% or lower, and then we automatically reduce the interest rate by 0.25% and reduce their payment amounts with that lower loan size. So it's really a win-win, and it's there for um, the customers that have the ability to qualify. And there's my cat. Have the
You're
ability
there.
to qualify for the payment, and they've got equity that's just not able to be accessed right at that time.
Yeah.
That's kind of it. It can be applied to other scenarios, but that's the most common one that we'll see.
Yeah. Oh my God, your cat's so cute.
This
Jumbo rate reducer. That's what that program's called.
jumbo rate reducer. So
Okay.
essentially, the key points I would say is you can buy a home jumbo with as little as 10.01% down and no mortgage insurance. And then if you're able within 180 days to get that loan to value make it look like as if you were to put 20% down, then we'll reduce the interest rate and recalculate your payment for free.
Yeah, that's amazing. Kind of like a recast loan, but recast doesn't just adjust your rate like that, 0.25%.
Right.
That's
And
so
then what's
cool.
nice is because it is jumbo, then going forward, it is eligible to be recast once a year if
Okay.
a customer has a bonus structure that allows for that or whatever
Oh
it
wow.
may be. it can still be recast further, but the rate won't drop.
Yeah.
That's just the one-time piece for that.
Yeah, that's cool. Well, mostly because then you're becoming just a Wells Fargo customer because you guys aren't selling your loans off, right? So you're just a customer for life.
Yes, exactly. So that's the key part with these is we keep the jumbo within a Wells Fargo portfolio, so we keep that flexibility. And even after the loan balance drops below the jumbo threshold,
Yeah.
it's still eligible to be recast. And yeah, obviously we want to keep the customer for life, so we want to facilitate that and keep them in house for sure.
Yeah. Yeah, super cool. Well, I can speak to Cody being available all the time. The big banks, there is that stigma that, they're just so big. They only work Monday through Friday, but nope, you've been at a wedding giving me phone calls, so that's been awesome. Thanks.
Yeah, whatever needs to be done for sure.
Yeah, right?
Yeah.
Keep the customer happy. So cool. Well, thank you so much for your time.
Yes, my pleasure. Thanks so much, Chelsea. Thanks for having me.
Yeah, we'll talk to you soon.
Okay, bye.
Bye.